just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see? I just wanna be free.
Okay. Another episode of the Things I Wish I Knew About Money podcast. I'm your host, Kamille Smith, and folks, as you can see, I'm a day late, but it's better late than never. I do want to apologize. Um, the holidays are kicking my ass right now. I ain't gonna front. I ain't gonna lie. I was in my feelings yesterday, and I knew there was a possibility that I wasn't going to record unless I had someone with me, but I don't, and it's a-okay. I'm feeling better, much better today, to be able to push through. So I just want to give a special shout out to anyone that is going through holidays, blues, dilemmas, sad, like seasonal affection. What? Seasonal? Gosh, you'd think I remember the word, but you know what I mean, y'all. So anyone that is going through anything, I see you, I hear you, and I am hoping that things are better for you as well. Um, however, I'm I realize I did not give you guys another reminder of certain things. But before I do that, I as you can see, I'm trying to be in the Christmas or holidays spirit. I didn't want to be a Debbie Downer or a Scrooge. I was like, you know what? Let me just put on the sweater and be jolly a little bit. Um, and I'll do my best because I want to be Miss Scrooge. I'm not gonna be Miss Scrooge today. I'm just gonna give y'all some tips and tricks on what to do. But the first thing is, obviously, I want to give a shout out to another shout out for everyone that celebrated my birthday throughout the month. I know I was saying that I was gonna have it till the end of the month. It's like a whole month, but it's not true. It stopped literally by last Monday. So it's all good, but you know what? Y'all, the month is the year is almost done. Golly. It is crazy how fast this month has gone or how long this year has been going through. And I'm not going to front. The last quarter has been the most difficult. And if anyone is having that same feeling, I feel for you. I understand. This too shall pass. And if you're able to overcome this quarter and be able to reset and do things better next year, then let's do it together, right? That is one thing I would tell y'all. However, I wanted to. Oh, shucks. The reason why I'm in somewhat of a Christmas mood is, big up my friend Sam. She, I know I have it here. Oh, No, I'll show you guys the fuller one. So she has her sorrow, samsara, boy, and it's ton up. It actually has no alcohol in it. And if anyone wants any, just DM me and I will give you the information for you to get some sorrow. I know it's Christmas Eve and she might not be doing anything else, but you know what? There must be a way. I'm pretty sure you could get it like after the Christmas and stuff, right? Unless she sold out. If she sold out, my bad. My bad. Um, eek. But during this episode, I am gonna have some of it. Like I said, there's no alcohol in it, so it's a okay. And so anyone that has had sorrow, or actually anyone that's listening or replaying it, what is your favorite thing to have during the holidays? So mine is sorrel and chocolate tea. I know there's ginger beer. Big up Akua. She also made her mother's ginger beer again. I have it in the fridge. We're gonna have some of that tomorrow. So big up that. I haven't made sorrow yet because I just haven't. I'm hoping to make it soon. If not, it's a good thing Sam gave me some sorrow. Okay? Okay. On that note, folks, I like once again, I just wanted to mention, so the main thing that we're talking about is just special reminders. I want to start off with tax planning because like my main focus is to remind you you have till December 31st to contact me. Actually, no, because I actually have an event the 31st. You have till the 30th to contact me to have a tax planning strategy. I just think it's more beneficial if we're to do that. So hold on, let me create a banner. Um, so of course, you know me. I like to uh, taxes. You know me. I love to have lovely articles, just so everyone's able to understand or comprehend why it's important to do this, right? But I also have a lot. Okay. So it's big up TurboTax for providing this information. Basically, the one thing we want to maximize is re- maximize savings and minimize taxes. And I have 9 strategies, and it's going to be discussing other things that I want to talk about afterwards. So one thing that we want to utilize is your RSPs, TFSA, RESPs, and the new one is FHSA. You really want to utilize those. And this goes based on what your game plan is. Obviously, if you have a new house, big up anyone that was able to get a house this year. Um, if you were, if you got a new house, you're not going to benefit with the FHSA, but you may benefit with the tax-free savings or your RSPs. If you just had a child this year, big up to the people that had a child just recently. Um, whether you're a new mom, a new father, new grandmother, grandfather, aunt, uncles, and all that stuff, you're able to use the RSPs for that child, right? Um, Also, I don't want to forget the folks that aren't able to use RSPs because of I always say there's a a certain income that you can have before you start thinking about your RSPs, and I think that's 50,000 and above is when you should start considering your RSP. If not, then you want to consider your TFSA, right? For the new homeowners, like I mentioned just 2 seconds ago, the first time home buyers credit gives you 10,000 credit when you buy your first property. So for anyone listening, you got your new house. One, you have to tell me, unless I already know. If I already know, obviously, I'll keep that at the back of my head. You also want to book an appointment so we can have those discussions, so we can utilize what you should do, or not what you should do, but remind you of the things that you need to consider in February. What else? Income splitting with a spousal RSP can reduce your taxes in retirement. That we will go into further discussion, but that's the key takeaways with this article. I just want to help people remember, always plan ahead before the year ends so you're able to be less stressful. I don't want to hear anyone next year say, oh my gosh, Kamille, I didn't know. That is a lie. I send these things out all the time. And also for the folks that have my newsletter, I will be sending it out this evening. Like I said, I I I know there's some folks that are still in the holiday mood, and so I'm willing to send out a newsletter. I want to be consistent with that. And that's the reason why I'm doing this as well. I want to be as consistent as possible for people that are watching or listening. So I appreciate it. So the people that are on Spotify, you're getting this around 5 o'clock or something. But first things first, and I always mention this, your RSPs is to help you reduce your taxable income, right? So here's an example. If you earn 60,000 a year and contributed 5,000 to your RSP, you'll be taxed based on 55,000, not 60,000. So, and I always say the tax deferral. I know there's some people that will say, "Oh, I've seen people not happy about RSPs, but if you plan it accordingly, then it will work in your favor, right?" Um, Number two, opening up a tax-free savings account, TFSA. I like to say TFSA; it's just easier. This is a win-win investment vehicle. If there ever was one, especially anyone over 18 in some provinces and 19. Voila, Messia comment. Yes, sir. Oops. Thank. Good evening, Tech. Good evening. Okay, so I'm just gonna put this up. Thank you, sir. I appreciate you. I appreciate you. Yes, and Tech also has his own thing, so please follow him. Tech versus Tech. See how he uses words. So big up yourself. TFSA, I think, is ideal for mostly everyone. And remember, folks, with your TFSA, you don't only have to put cash in it. You could put GICs, you could put stocks, especially dividends. You know how I feel about them dividends. Also, mutual funds, index funds, segregated funds, however you want to do it, you're able to do that. However, so this year, 2023, the annual contribution limit is 6,500. However, breaking news for 2024, it's increasing up to 7,000. I did mention that in on my Instagram as of late. But hey, 7,000 that you can hold. So hear me out. Hear me out. So I know ideally you could put $583.33 a month, a month to put into that. So that's not bad. I know there's some folks that can save more than that, but you really want to take this into consideration. Really think about your TFSA, utilize it properly, because remember, it's different from the RSP and the TF. It's different from the RSP because it's money that is actually after tax instead of pre-tax. And I know if you see my episode when I talked about the different types of investment accounts, you'll see why both of them are beneficial, but which one works for you, right? So that's 7,000 that you can put in each year. And hold on, I should I should have looked at this before, but the overall contribution amount that you can have in your TFSA is up to 95,000. Okay? That's pretty. Baby. So, the way that you can find that is on your CRA online account, and I advise everyone to try as I'm not going to say for the older folks. I'm not dogging the older folks, but it's easier if you have your CRA online account and be able to see how much money you can actually utilize and put in. Because I guarantee, I'm going to be nice. I'm going to say 60% of folks have not used it fully, right? So, and hey, no knock to y'all. No knock to y'all, okay? So the third one is income split with your spouse. So anyone that is newlywed, I know there's some people that got married this year already, or is about to get married this month, or newly engaged. Big up yourselves. There's certain things that I will discuss when you book an appointment with me. To strategize that, especially not engagement, new homeowners that live together with their significant other. I have news. I got some news, but you have to book an appointment with me. So for income split with your spouse, sharing or splitting pension income with your spouse lowers your income and increases theirs. The idea is for you, one of you, to reduce your tax liability without overly increasing your spouses to save on taxes together. There's actually ways to utilize this with certain programs. I have a program that you're able to utilize that, so book it with me and we can have that. Number 4, take advantage of employer pension matching programs. Listen, come close, come close. Anyone that has is working with an employer that's able to match, please utilize it and match. Like if they're matching your pension, yo, you're getting free money. I've been telling everyone that all the time. If you're working at somewhere that gives you that, take it. Take it. So example, I know I don't live in Quebec, and I'm not dogging anyone that lives in Quebec. So here's the example. You live in Quebec, you earn 50,000 per year. If you were to contribute $100 every 2 weeks to your retirement plan, that $100 would save you 33 in taxes. This is for people in Quebec. So it only costs you 67.67 to invest $100. This is upfront tax savings, can help you reach your saving goals much faster. And I don't think I've talked about it yet, but there's two different types of retirement. There's the defined pension plan and the defined Bennett pension. Oh, I'm not saying it correctly. Give me 2 seconds, 2 seconds, 2 seconds, 2 seconds, because I don't want to say it wrong. No. I'm gonna get back to you guys on that one. I I just had a brain fog with that one. Um, Yeah, I had a brain fog with that one. But the number 5 is invest into real estate. Right now, investing in real estate is quite tricky depending on your capital, right? But I get it. I get it. But it's no secret that real estate can be a great way to amass wealth. And what's just as good as when you sell your primary property, not investment property, the capital gains you make are tax free. So that's true. Anyone that has a primary residence, you don't have to pay any tax on that, but you definitely have to indicate that that is your primary residence. So it's very important to keep a straight line with certain things, so you don't have to like be what's happening. And that's what I do. I don't want anyone that is going to book an appointment with me has to know that you see this straight arrow, that's what I do. I'm like a Saji, boom, straight arrow, and boom, bam, bam. um Man, I'm pissed that I forgot that for a second. I apologize, guys. Boom. So it's, gosh darn it. It's a defined benefit. Yeah, see, I had it. Defined benefit plan, pension plan, and defined contribution pension plan. So those are two different ones. I'm going to have an episode about that. And I'm also going to ask you guys to give me suggestions of topics that you want to hear for the new year, because I'm not saying I'm running out of material or content, because there's something that happens every day. Even if it's articles and stuff, send me articles that you want to discuss, send me things that you're not familiar with. I'm all about that. But yes, invest in real estate. As long as you live in a space without using it for any rental purposes, all that profit is yours. So if you buy a condo for 500K and you sell it for 800K, the 300K difference is yours to keep tax free. So that is if that is your primary residence. So remember that. Capital gains aside, if you invest in rental property, you could save tax on the rental income you earn by deducting related expenses. You can lower your rental income either further by taking the capital cost allowance deduction, CCA. That, I feel like we've had a discussion about that, or I've had a discussion about that. So double check. But I also want to remind folks, like, damn, Cam, I can't get no condo for 500K. Like, you must have mind. And I'm like, you know what? I get it. However, there's a different option. There's REITs, so real estate investment trust. Um, this helps you get your feet wet into the real estate game. And if you know me, they have dividends, so that's always also a great thing. I really recommend folks to consider REITs. Of course, do your research before you get it, and which one will work for you. Number 6 is claim the first time home buyer's tax credit. Um, yes, that's the 10,000 tax credit. So, like I said, it's very ideal for anyone that is just purchased a new home to tell me. That's all you have to do is tell me. Um, Especially if we haven't talked throughout the year, and I really recommend folks to start doing that. I need to have discussions with you throughout the year so I'm able to plan accordingly with you, so you're not surprised in February. I've had incidents where people have done things and I was like, why didn't you tell me? Oh, I forgot. I really want to stress, as your personal finance trainer and the person that does your taxes, is really ideal to have these discussions, book appointments with me and have these discussions, because it doesn't make sense for both of us going in blindly when you could have just told me throughout the year. And I like to take notes because taking notes is ideal. What else? Hold on, sorry. So if you and your spouse or common law partner decide to take the plunge and buy that first property, you can claim a 10,000 tax credit. That's a nice housewarming gift. Boom, boom, bing. Sorry, but before it was actually 5,000. So it's actually nice that they've been able to increase it, right? To qualify for this tax break, you and your significant other can't have lived in a previous home owned by either of you in the past 4 years. That's the little thing about it. Um, Number 7, looking into government reimbursements for eco-friendly upgrades. So, you know what? I never usually talk about this. I'm not saying I don't care about the earth. It's just it kind of goes over my head, but I do understand that there's some individuals that are going into greener aspects like EV cars and all that stuff. So there's a Canada Greener Homes grant. Think of it as a free cash from the government just to become more eco-friendly, and you likely qualify for the Canada Greener Home Loan, which offers a zero interest loan to pay for upgrades. All right. So that one's definitely going to be something I'm going to review as well. And I'm going to put this in my newsletter. I just realized it's pretty ideal to put this in newsletter so others will be aware of this. So, boom, bam, bam. If you don't have me on your newsletter, please, I'm doing it tonight. Send me your email address privately. Don't put it on don't put it anywhere where the public can see it. If you want to be on the newsletter, send me a DM privately, of course. Number 8, invest in your child's future with an RESP. So again, for the new mothers and fathers, aunts, uncles, grandparents, sorry, geez. Invest in your children, grandchildren's, niece, nephews, post-secondary education with a registered education savings plan is good math because you don't have to pay taxes on the money you put into this investment vehicle. Uh, because the children pay for it. These investments grow tax-free until the funds are withdrawn by the plan's beneficiary, your child or niece, nephew, grandchildren, to pay for their education. But wait, there is more. The federal government chips in with a Canada Education Savings Grant CESG. The maximum yearly CSG based on your income and contributions can range from 600 to a lifetime maximum of 7,200. I believe they increased it as of late. I'll double check that. Also, and this is what yo. Anyone that has an RSP for their children, nieces, or anything, you actually receive 20% up to 2,500. So I always tell folks, if you at least contribute 2,500 into your child's RSP each year, you grant them 20%, $500 per year from the government. Um, Yo, it's no brainer. Yo, that's 20%. Like, even if you didn't put the full 72 max, like 2,500, that's all. And for the folks that want the math, because I always do the math. Literally, if you're putting $208.33 in you're able to get $500. So yeah, just think about that. So after 15 years, you'll have contributed 37,500 added to the government contribution of 7,200, which comes up to 44,700 in savings before interest. And so, like, Anyone that hasn't opened up an RSP, please open up an RSP. I I don't do that aspect, but I do have, as you can see in the show notes, I have Questrade, and you can open up an RSP with Questrade. Yes, you'll be able to get incentives with it, and yes, I do get incentives with it as well. But it's a win-win situation. Like, cause see this, yo, y'all see how inflation and things are going on with the world. Think about it. um a lot of folks that I've seen that have benefited is not having OSAP, once not applying for OSAP when they start university. They have um they're ahead once they don't have to use OSAP, right? And I know there's some things that happened in the past with RSPs and certain programs. So you really want to do your research on which ones you want to choose, or if you're really concerned, just do it yourself, right? But yeah, do your research on which ones makes sense for you and your family. Number 9 is reinvest dividends, tax refunds, or savings to make most of your dollars. So I agree with this with the dividends. You know me, I love to boost about dividends. I'm like passive income, but it's always good to reinvest it into your investments because you get more shares. Duh. So imagine paying yourself first, which you should always do, before any of your bills, because bund those bills. I'm joking. No, but literally, truly pay yourself first because you need to have a safety net at the end of the day, right? So imagine paying yourself first before any of your bills when you get your paycheck. This is what reinvesting is like. You receive monthly dividends, which are taxable, especially if it's in a non registered account. Yes, non registered account, which is not TFSA or RSP. Okay. However, if you reinvest dividends back into your fund every month, you can increase your overall investment. This means your portfolio will grow in value and future distributions will likely be higher, which is true. I've seen it with my 2 eyes. So no matter what stage you are in what life stage you're in or how you choose to invest your money, you don't have to be in the top one to save on your taxes. True. By incorporating tax savings strategies along with being initial with your tax planning, the extra effort you put in today can set you up for to feel more confident and empowered for your financial future. I know I thought I said 10, but it is 9, and I know that it's ideal to reinvest those dividends no matter what. You will be happy about it, right? So that is for personal. And I also wanted to discuss real quick because I'm now in year end with folks. Year end tax planning is kind of interesting to say the least, but I am liking it. So for tax planning for you and your business, I'm gonna do it real quick. I don't want to be here long. I know y'all want to keep packing your gifts and stuff, or those last minute shoppers that have to go to the mall. Don't worry. I'm not gonna say if I'm one of those or not. So have you reviewed your family business payroll? Ooh, start by reviewing how you pay yourself or your family members to find a tax efficient way to take funds from your business. If possible, pay yourself a salary that's large enough to maximize your CPP and RSP contributions. Make sure any family members that work for the business are paid reasonably. So no, you're not giving them a little $500 for the year. That's not reasonable. The CRE will be like, really? All right, flag this person, yeah? So, a salary that you would pay a non-family member to do the same job. Determine whether you want most effective mix of dividends and salary is for you and your business. Keep in mind that a business can deduct a reasonable salary payment, whereas dividends are paid from an after-tax profit. Dividends paid to a family member may subject to the tax on split income rules and trigger tax on a higher marginal tax rate. Bonuses accrued must be paid within 180 days following the year end to qualify for the deduction. Ding ding. So very important to know. Have you borrowed money from your business? You may charge yourself interest if you've borrowed funds from your company. If the interest rate you're charging is below the prescribed rate set by CRA, the differential must be treated as additional income for tax purposes. So for the business folks, we need to set up an appointment to determine what the prescribed rate is, or you could go on CRA because it is there. Um, you should repay any loans from your business within 1 year of the company's tax year end. If you don't, you'll be reported the full loan amount as a income for the year it was received. For example, let's say you borrowed 10,000 from your company on June 1st, 2023. Your business has September 30th year end. If your loan remains unpaid on September 30th, 2024, you'll be reported 10,000 as income on your personal income tax. Jeez. So folks, you really want to sit down with a professional when you do these type of things. Especially with incorporated. If it's incorporated, I'll send you to someone else because I stay in my lane. I stay in my lane. Should you trigger tax losses to offset realized capital gains? If you have realized capital gains in 2023 from a non-registered investment and you have other investments in a non-realized losses, consider selling the lost investments before the year end. Hi, it's the 24th. That's why I'm trying to do this before you guys, send you guys a reminder to offset the realized capital gains in the year, which reduces your taxes payable. This tax strategy is the most effective if you have no further interest in owing the losing. If you're like, bun this investment that I have, I've taken my losses, I'm okay with getting rid of them, then it's very efficient for you. But it's important to note that the superficial loss rules may deny the capital loss if you or an affiliated person acquired the property or identical property within 30 days before or after the sale. That is something you want to sit down and talk about, because that one's tricky. Can your business take advantage of relief measures before they expire? I'm not talking about this one. This one, talk to a tax specialist if you want to talk to a tax specialist, because they talk about this in incorporated taxes. I know someone, so don't worry. Are you thinking about selling your business? If you plan to exit your business sooner in the future, take some time to understand how recently proposed tax measures could impact your succession plan. If you want to transfer your business to a next generation, children, grandchildren, nieces, or nephews, consider whether you should do before the end of this year. Changes to integrational business transfer could affect your transaction, and that change comes into effect January 1st, 2024. So I'm gonna put a hold on that one and look at that on a next week, actually. Okay. Do you want to plan to make a sizable donation? And this is for personal folks too. If you're a high income individual that makes large donations or of cash or public company shares, consider giving before the end of the year, December 31st, as the proposed changes to the AMT rules may also affect you. Current AMT rules follow the regular tax system. It doesn't subject gains on donations of public company shares to tax. The proposed rules include 30% of capital gains on donations in the AMT base. And this is for also individuals that want to donate before. The great thing is, if that's not if that strategy doesn't work for you, you can also do your RSPs, because you have until the first 60 days of 2024. So, but I suggest to book an appointment with me, so we could talk about it before December 30th. Remember, I'm busy. Boom, there it is. And I'm also gonna put, actually, hold on. I'm gonna pin it in the actual, I'm gonna pin it in the show notes so you guys can say, but Kamille, you never told us. Yes, I did, fam. And look, I'm gonna pin it just now. Oh, hold on. So I'm saving it here, I'm showing it here, but I'm also pinning it up here. Gosh. Hold on. I think there's a way to do it. And I'm struggling right now. Okay. It's okay. It's pinned there. I'll pin it after, since it wants to be doing this. Okay? But is that how you pin it? I'm really trying to figure this out. It's all good. It's all good. You don't want to pin just now. But sorry. Also, I'm not talking about that one. But yes, overall, these are the things that you want to take in consideration when it comes to tax planning. Like I said again, book an appointment with me so we can sit down and strategize before the year ends. And anyone that has a business that they started recently, please, 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 before the year ends. So I feel like you have till December 30th, because, banks close on the 31st. Register your business if you haven't done it yet, but you should have done it already if you're having a side hustle. And also register your business and have a separate bank account for your business. I cannot stress it enough. If I see anyone that comes to me with a personal bank account with their business stuff going in, I'm charging a fee. I've explained it so many times. We've been doing this. I've been doing this for 3 years. There's no way that I haven't told you to separate your business and personal account. Anyone that does it from the get-go, I'm charging you extra. So I suggest you get your together. This is a reminder, get your together and just do it, please. It just makes our life easier, right? Makes both of our lives easier, because if CRA come catch you, cheese and peas. But yes, also I want to speak to the last minute shoppers. If you didn't see the last episode that I did 2 weeks ago, I mean, the malls are about to close just now. It's 5 around here. I hope that you're able to get everything you desired, and I hope that you have a splendid holidays. If you couldn't think of something to buy, think of something sentimental. Write a letter. Do homemade goods. Make sorrel. Once again, big up Sam for her sorrel. Cheers. I'm taking a sip. Um, be around loved ones that be around loved ones for the folks that are have lost a family member, I pray for you that it's not going to be as difficult as before, you know? Big up Miranda. Woo! I hope that, that this year is not difficult, and for the ones that it's going to be difficult, be around loved ones that will make you happy and keep you sane. Even if you can't see them tomorrow, just try to see them throughout the week. I know for sure I'm gonna be doing that this week. I'm going to be seeing my what is it? What are we? 20 years? 20-year friendship? Shit, that's deep. Like friends from elementary school or high school, middle school. I'm gonna be seeing them so we are able to catch up and just have some laughter, right? Um and just hug your loved ones. And even if you don't celebrate this, or even if you're Miss Scrooge like myself, just try to find happiness in this holiday, or embrace being just embrace how the holidays are for some people. And if you can't be happy, just stay away from everyone else's happiness. Or volunteer so you're able to give back as well. Yes, you told me 20 years. Is it 20 years? It's crazy. Big up Miranda. Why? Um, and gosh, I can't think of anything else. Um, I just hope I'll be back. So the game plan for the new year is, whether I'm having a bad day or not, I will be consistent with giving you guys information, content. I'm going to start doing batch videos because I want to be consistent with having it on Saturdays and then giving people to listen something on Sundays. So my bad again for being in my feels. Like I told someone yesterday, keep hustling because tears don't pay the bills. So I'm gonna find a way in the new year to be able to still be present and focus no matter what's happening. And I know someone's gonna say, "No, Camille, think about your mental health, right? This is how I cope. It's okay." But on that note, folks, Happy New Year! Or gosh, Happy New Year! Someone told me in their chat or in their status that they said that to someone, and here I am making fun of them before, and I just almost did it. But happy holidays, whether you're celebrating Christmas, Kwanzaa, Hanukkah, or whichever you're celebrating. I hope you are able to spend it with your loved ones and family and friends. All right. Till next time, folks. Whoop whoop.
I just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revelation.